Good morning, everyone. Wow, this room was empty not so long ago. Wonderful to see a full room, including standing room in the back. Tells me all I need to know about the importance of this conference. I've been listening intently to the speakers that have gone ahead of me, and I was struck by something that Jeff said. We, as payment leaders, have one job over the next 2.5 days, which is to come together, interact with one another, and tell stories. Not a novel idea I would offer to you, but an illuminating one nonetheless. Susan reminded us of the theme of this year's conference: innovate, collaborate, and transform. And I would offer you that no story on the topic of innovation can be complete without a discussion of promising current and emerging payments technologies. So, related, I thought it would be useful to talk about the promise that one such innovative topic holds, both today and is expected to hold in the future as well. That, of course, is the topic of alternate payments. Let's dig in. So what are alternate payment methods, or APMs, as I say up there? Well, I offer you this definition: any way to pay for goods or services that is not cash or tied to a major debit or credit card scheme qualifies as an alternate payment method. Examples abound, and we all know them: bank transfers or account-to-account payments, buy now, pay later, digital and mobile wallets, which are all the rage in so many countries around the world, including right here in Canada. Cryptocurrencies, which seem to be the talk of the town, especially in recent days with the advent of cryptocurrencies like stablecoin that price themselves to an underlying reference asset, such as a fiat currency, such as the Canadian dollar, or to a stable commodity like gold. These are all examples of types of alternate payment methods, or APMs. And these alternate payment methods have proliferated, particularly in the last decade or so. We now have local in-country APMs that have caught on like fire. Blik in Poland, PhonePe in India, in particular, have gained prominence and done so rapidly. The speakers that have gone before me talked about the importance of instant payment schemes. Pix in Brazil, NPP in Australia, UPI in India, Jeremy talked about it, and I'm sure we'll talk about UPI several times more before this conference is over. They've all grown in significant prominence and have done so rapidly. FedNow and Paze have emerged as the next would-be disruptors. The RTR, let's not forget, right, which is everybody's pet project in this room and in this country, once live, is expected to serve as another major disruptor right here in the Canadian payments landscape. So why talk about this, you may ask? Well, I offer you this, the fact that numbers matter. Numbers matter. On the left, a chart of global payment volumes of transactions that were processed via these alternate payment methods across 40 major markets around the world, of which, yes, Canada was one. That number, over the 5-year period from 2025 to 2030, is projected to nearly double. The Canada numbers that I show you on the right show a similar growth projection. Publicly available data shows the numbers are expected to just about hit a 2.5 multiplier in that 5-year period between 2025 to 2030. What's expected to drive this growth, you may ask? Aha! While this study cited a pretty modest growth rate for account-to-account payments, the data that I looked at was as of the end of 2024, and it didn't yet have any real projections to talk about in terms of the payment volumes that we all expect will come once the RTR goes live. Credit card share, this was something I found surprising, was actually forecast to decline on a go-forward basis. However, credit card volumes are expected to continue to grow, and significantly so, given their expanding use within digital wallets. What's driving this growth, Guru? Some of you might ask. Well, I offer you the fact that there are any number of growth factors, but I'll touch upon just a few. The number one among them, demand from the younger customer demographic. Millennials, but even more so, those Gen Zs. Oh, we all know those Gen Zs, you know, them with the smooth and wrinkled skin and the full heads of hair. Those consumers in particular, they've never known a time in their lives when they didn't have a smartphone or a smart device in their possession. Not surprising then that the same demographic is the one that has also ended up being one of the earliest and most significant adopters of these alternate payment methods. We've already touched upon one very important topic which I expect will see a lot of daylight in the next 2.5 days, that of trust in the payment system. One advantage that these alternate payment methods offer from the get-go is the improved security features that they bring to the table that help protect user information, reduce the inherent risk of fraud, thereby increasing that trust in the safety and security of the payments that we as consumers can make using these alternate payment methods. Trust, as we all know, is paramount in today's fraud-prevalent era. I'll touch upon a couple more. The partner ecosystem. This one is particularly exciting to me. What were providers that would otherwise be expected to fiercely compete in the marketplace have shown an increasing willingness to come together, put complementary strengths together, to offer expanded offerings in the market in the face of rising customer demand. Some prominent examples that I'm sure a number of you, if not all of you, are aware of. Klarna and Adyen came together to offer buy now, pay later at the physical point of sale. Google Pay and PayPal, I think, is a pretty famous example from just last week. Corpay and MasterCard have announced their intention to come together. I see a few nodding heads, have announced their intention to come together in what I think is a pretty unique arrangement. Corpay is now going to offer to process high-value cross-border payments for MasterCard's institutional clients. MasterCard, in turn, is going to provide virtual card solutions to Corpay's customers. Last but most certainly not least, we've already heard a couple of the speakers that went ahead of me talk about the need for building a frictionless engagement experience. Consumer preferences, as we all know, have changed. They're not changing, they have changed. And the evolution in that consumer demand has evolved towards demanding payment experiences that are simple, that are personalized, yet are highly secure. The rule of thumb now appears to be, don't make me think about the payment experience. Don't require me to do anything special to make a payment. Give me the ability to make a payment seamlessly, preferably frictionlessly. Are all these growth factors driving adoption in a uniform way across the globe? Absolutely not, as you might imagine. A busy chart, I know, but I thought I'd point out a few things about this that the audience should know. Some of the leading factors in various regions around the world that have driven the adoption of these alternate payment methods are different. In North America, and I think the speakers that have gone ahead of me have touched upon this already, the need for faster, more convenient payment methods that improve cash flow is what gave us real-time payments. Market infrastructure providers responded in kind and delivered. TCH's RTP, the Federal Reserve's FRB, the imminent real-time rail, yes, we will talk about that topic every single hour of the remaining 2.5 days. But the RTR, powered by Payments Canada, these all have and will provide the necessary infrastructure that will allow for solutions to be built on top of them to enable the processing of real-time payments at scale. In LATAM and in APAC, I found something in common. The strong support from the government, central banks, central banking associations, in some cases, the federal governments themselves. Examples abound. Jeremy talked a number of times about UPI. It's probably the most prominent example of the magic that can happen when a central bank gets behind its nation's payments modernization program. Financial inclusion, also something that the speakers that have gone ahead of me have already touched upon. I can think of no nobler goal in payments than to bring some of these programs to the market, to expand access to financial products and services to what were previously underbanked and unbanked populations, to offer those same products and services in an expanded capacity to small businesses that operate in rural and remote areas that wouldn't otherwise have had ready access to that working capital. When you expand the availability of some of these offerings to an ever larger group of people, magic happens. Why? Because you're deliberately accounting for and enabling financial inclusion. LATAM and Europe, I found, had something in common, which I found somewhat interesting. The need for cross-border initiatives, the need to create the ability to enable interoperable payment corridors for seamless cross-border transactions was something both LATAM and Europe had in common. Why? If you look at both LATAM and Europe, they're both essentially landlocked continental masses that make up a number of different countries that are smooshed together on that continental plate. And so the need to be able to facilitate seamlessly cross-border payments is what drove some of the alternate payment revolutions that I have listed on this page. Now you might say, so what does this all mean? Some of you are providers in the audience that have existing offerings, that are looking for ways in which to improve the penetration of some of what you have already brought to market. Others are very likely looking at bringing new offerings to market. And I thought I would end by giving you what I believe are a few practical considerations for how to go about generating the kind of penetration that you would want, either with your existing offerings or with the ones that you are looking to bring to market. This here is an encapsulation of what we at Cognizant have chosen to talk about as the CRAVE criteria, namely convenience, volume, adoption, reach, and efficiency. I would offer focus on simplicity and accessibility to deliver convenience, deliver ease of use. How? An intuitive interface. Simple yet robust authentication are some ways in which to achieve that. To achieve reach, focus on building interoperability across open architectures that enables seamless integrations across disparate banks and payment platforms. We've already talked about the need to prioritize security and fraud prevention. Safety is job number one, people. And with all the Gen AI-based offerings that are here and to come, that should help us achieve widespread adoption. I'm not going to harp on financial inclusion again. I think I talked about that a fair bit. Last but not least, efficiency. Let's not rest on our laurels. Let's embrace continuous evolution and adaptability to foster innovation, deliver enhancements, new features, capabilities, so we all stay relevant and ahead of the pack in this ongoing race for relevance. That's my time today. Thank you for listening.